This week, Reserve Bank Governor Michelle Bullock kept the cash rate on hold and said the recent inflation data, which fell to 2.7% in August, was simply a temporary reduction due to the cost of living relief provided by state and federal governments. Ben Powell is the chief strategist for the Asia Pacific and Middle East at BlackRock's Investment Institute. He says the RBA is becoming isolated when compared to its global peers like the US Federal Reserve.
I think we are expecting to see something of a global rate cycle, meaning rates are coming down. With that being said, it's important to note for us at the BlackRock Investment Institute that the inflation fight is not over. We are still seeing significant drivers of inflation, maybe tariffs, maybe some impact from policies impacting the labor supply in the US. Energy transition perhaps being a little bit expensive along the way. So there are these very substantial, long-lasting drivers of inflation which are persistent. So what that means for us is, yes, we do think rates are likely to come down, but perhaps not by as much as global markets are expecting, because sadly the inflation fight is not fully over, and I think central bankers all over the world are very conscious of that.
Yeah, how long is it going to take major economies like the US to bring inflation down? I know the market seems to think rates are going to be cut quite aggressively, particularly in America, but that probably might not be the case.
That's where we are. So the market is expecting that rates can maybe come all the way down to 3% over the next 18 to 24 months. We think more like 4%. So again, we're fully on board with the idea of rates coming lower. That's good news. That's a tailwind for economic activity and for markets. So it's a good thing. But given the changes in the supply side of the global economy around demographics, the energy transition, this sadly much more difficult geopolitical world with the inflationary implications that has, we don't think it can be an old-fashioned kind of rate cutting to zero, because it's just a very, very, very different inflationary context. Very different from before the pandemic, where inflation was approximately no problem for 10 years and more. Inflation continues to be a problem, and the last thing central bankers want to do is get too excited too soon. That would be the big mistake I think bankers are aware of, central bankers are aware of, is cutting too much too soon and then having to kind of fess up to having made a mistake with inflation maybe perking up again and having to re-hike. That's something they don't want to do. So we think central bankers in the US and elsewhere are going to proceed more carefully, meaning slower in their cutting than global markets are currently anticipating.
Yeah, well, the Australia's Reserve Bank this week kept rates on hold. Our governor says they're unlikely to cut interest rates until at least next year. Inflation in Australia is still too high. The governor called that out this week as well. Is Australia starting to become a bit of an outlier, though, compared to its global peers? Because you look at other central banks and they are already on this monetary easing cycle.
Yes, I think it's the short answer. I think Governor Bullock was extremely clear that the inflation fight is not over, and we need to be very careful in Australia about believing the headline figures of inflation, which do look rather better. But that is to some degree, sadly, an optical illusion, because the headline figures are flattered a little bit by the electricity subsidies and so on. So the central bank, rightly in our opinion at the BlackRock Investment Institute, is much more focused on core measures of inflation, the kind of real underlying situation, which sadly is still a bit too high. And that's why I think Governor Bullock was clear that there's more to do, and she's going to keep policy where it is for some time to come to make sure that we don't let inflation get its head again. We need to keep on top of it, because letting it out of the box would be, in her judgment and also our assessment, that would be the bigger mistake.
Yeah, one of the issues for Australia as well is China's spluttering economy. They're obviously our biggest trading partner. Where do you see China and its economy tracking over the next couple of years?
A little bit slower. So I think China's growth this year will probably come in something like 4.5% to 5%, maybe a little bit below their official target of 5%. They've got a big problem in China, which is a crisis of confidence. Consumers, households, and the corporate sector seem to be anxious about the future and are therefore hoarding cash. They're kind of increasing the scale of their, if you like, rainy day fund. So that's meaning we're not seeing consumer spending, we're not seeing corporate spending, capex to the scale that we would like. So the question in China is, can the government step in and provide something of a positive confidence shock to try and re-energize animal spirits and kind of perk everyone up and get them out spending? We've seen a couple of interesting policy adjustments over the last week or so, but for us at the BlackRock Investment Institute, it's still not enough to deal with this, if I can say, malaise that China finds itself in with this sense of a loss of confidence, which for now is really weighing on the economy, and I think we think will continue for some period to come.
Yeah, I know at the Institute you're overweight on US equities and artificial intelligence stocks and pretty positive on fixed income as well. Just explain the upside there for those various assets in this current economic environment.
So a couple of things. Firstly, we think inflation is going to continue to be a problem. So when you're thinking about your savings, inflation is the thief in the night, right? It's the stuff that makes your purchasing power, your ability to buy cups of coffee or school fees less and less. So you want to be invested in assets which have some resilience to inflation. That includes equities. So equities, I would say overall we like, including for reasons pertaining to the economic situation, this ongoing inflation. To your specific question, yeah, the AI theme, we're on board. We think it's a mega force that's going to run and run. We've brought a little bit of nuance into our AI positivity. We're broadening the kind of positive view to include the whole ecosystem. So AI, it isn't just the kind of the foundational chip makers. There's a whole ecosystem around it. So the metaphor I use is you think about me and you, we're carbon brains. We use around 25% of our calories is used to power our brain. The silicon brain, the artificial intelligence, needs the same kind of ecosystem, the energy architecture, even materials that are needed to kind of feed the artificial mind. So we're on board. It's a mega force. But our thrust now is that the AI kind of bullishness likely spreads out away from the core technologies, which are still great companies, but spreads out to that broader ecosystem, including the energy space, some areas of property, utilities, even materials, which are going to be necessary because, the artificial intelligence, we talk about it, it exists in the cloud. That's sort of true, but it's still a physical thing, right? We've actually got to build the thing and give it energy to power the very clever answers we're all hoping it can create. So we're very bullish, somewhat bullish AI, but broadening it into that broader architecture, broader ecosystem, as I say.
Ben Powell from the BlackRock Investment Institute. Thanks for your time.
Thank you.